Let me tell you something straight. Something I learned through my own mental battles, my own beliefs, and my own emotional scars. The market doesn't owe you anything, not a cent. If you step into it expecting certainty or fairness, you'll lose faster than you entered. But if you learn to think in probabilities, if you train your mind to recognize a high probability setup before the crowd sees it, then, my friend, you stop being the one reacting to the market. You become the one aligned with it. I didn't grasp this overnight. It took years of observation, thousands of hours watching price movement, learning not what the market was saying, but how I was interpreting it. You think price action is random. Oh, it's not. It speaks in patterns and probabilities. It whispers first, small clues that most never notice. And if your mind is clouded with fear or greed, you'll never hear the message. When a breakout is building, when the probabilities start aligning, you can almost sense it. Not from prediction, but from awareness. Ever felt that tension before something big unfolds? That's alignment, not forecasting. But here's the catch. Most traders don't want to wait for alignment. They want instant gratification. They chase, they predict, they gamble. And what happens when you gamble? You surrender control to randomness. You become the victim of uncertainty instead of its master. So let me ask you, when you look at a chart, are you trying to know what will happen? Or are you allowing yourself to see what's happening right now? See, winning and losing have nothing to do with intelligence. I've met brilliant people, analysts, academics, theorists, who couldn't stay consistent. They think too much. They want reasons instead of acceptance. The market doesn't pay for explanations. It rewards those who act in harmony with probability. Recognizing opportunity means noticing when energy is building, when professionals are positioning quietly, when the crowd is unloading emotionally, and when pressure is about to release. How do you observe that? You focus on structure, not story. Forget opinions, forget news. Traders will justify every move with logic, earnings, politics, rumors. But price reveals truth before logic does. A genuine setup shows you compression, equilibrium, volume tightening, a coiled potential. You don't need confirmation from news. The news comes after, when it's too late. Haven't you noticed? The explanation always arrives after the market's already moved. When I was learning, I'd sit for hours just watching. Small trades, small risk, but full attention. I noticed that before every explosive move, there was calm, disinterest, and quiet accumulation. Others ignored it, distracted by movement elsewhere. But that calm was structure building, probability forming, then suddenly momentum. And the crowd would chase what was already gone. Ever find yourself buying what's already run? That's emotional, trading. The key lesson is patience, waiting without needing, observing without forcing. Most traders can't do that. Waiting feels like losing control, like missing out. So they act too soon, too often, mistaking motion for progress. But in trading, progress is psychological stillness, waiting for alignment before taking action. Can you wait without tension? Or do you need constant stimulation? When a market coils, when energy compresses, it must expand, up or down, doesn't matter. What matters is staying detached enough to let the probabilities reveal the direction. A breakout isn't magic, it's the natural release of built-up energy. Think of it like pressure behind a wall. Cracks appear first, tiny shifts, then the break. That releases flow. And if you're positioned with it, you move effortlessly with the current. What makes traders miss that? Two things: fear and greed, the twin illusions that distort perception. Greed makes you act before the setup matures. Fear makes you freeze when the moment arrives. Both come from attachment, to outcome, to being right. You must let go of both. True consistency lives between patience and boldness, confidence without expectation, courage without recklessness. Which side pulls you harder, fear or greed? I've seen markets where everyone believed they'd found the secret. When everything worked, confidence turned into arrogance. But markets punish expectation. The same traders who felt invincible soon lost everything because they confused random wins with skill. A true breakout isn't luck, it's structure, a build-up, and release. If you can't tell the difference, you'll always feed the professionals. Remember this, trading is not about being right. It's about staying aligned with probability. You can argue with the market, but it doesn't argue back. The only question that matters is, did you stay objective long enough to catch the move? Consistency comes from discipline. Discipline to act when your edge appears, to hold when fear whispers, and to exit when euphoria tempts. Most traders fail at one of those. Which one challenges you most? Entry, patience, or exit? Let's get practical. When pressure builds in a market, you'll see subtle shifts, slightly heavier volume, repeated testing of resistance, shallower pullbacks. Oh, it's not prediction, it's recognition. The market is saying, the balance is changing. Can you listen without bias? That's trading psychology, reading behavior, not opinion. But not every setup is real. There are traps designed to test belief. Professionals love to trigger emotional reactions, shaking out the impatient before the true breakout unfolds. That's why you must wait for confirmation, not from hope, but from structure. A valid breakout sustains itself. It doesn't spike and collapse. It holds and absorbs pressure. That's strength. And strength attracts momentum. Once the move becomes obvious, the crowd floods in. That's when the headlines come, the chatter rises, and emotion replaces awareness. By then, the move's already mature. I remember observing a setup that sat silent for weeks, compressed, ignored, like a spring under tension. It began pressing slowly, barely noticeable. I waited, detached, observant. Then it released, explosively. The crowd chased. I was already there. I didn't need to feel excitement. I felt alignment. That's the difference patience makes. Most traders crave excitement. They equate activity with success. But excitement is the opposite of consistency. If you seek thrill, go gamble. Trading demands calm boredom until the opportunity appears, and when it does, you act. Not a moment before, not a moment after. Can you handle the quiet? Can you remain centered while others are restless? The irony is, spotting high probability setups has nothing to do with genius. It's about awareness. Anyone can develop it if they're willing to observe, to learn, and most importantly, to release their attachment to being right. The market always reveals its truth, but traders are too distracted listening to others, too busy chasing noise. They'd rather rely on opinions than trust their perception. That's why the market keeps taking their money. Don't think professionals don't know this. They depend on it. They thrive on the crowd's emotional reactions. While the masses predict and chase, the professionals prepare and wait. And when the moment of expansion comes, the professionals are already in flow while the crowd is still waking up. So ask yourself, do you want to react like the crowd or align like the professional? A genuine breakout is simply the market's way of signaling imbalance, telling you, here's where energy is flowing. Once you identify that shift, you must have the mental clarity to follow it. Doubt is the silent killer of consistency. A trader sees the setup, hesitates, waits for certainty, and the move is gone. Or worse, he enters, feels fear at the first retracement, and exits before the real move unfolds. Have you felt that sting of being right, but unprofitable? Nothing hurts more than seeing your analysis validated after you've already abandoned it. Timing isn't prediction, it's recognition. It means acting when probabilities align. Not too soon, not too late, just when structure confirms readiness. That ability only comes through exposure, through observation, through repeated engagement until awareness becomes instinct. And instinct isn't mystical. It's stored data, the subconscious memory of patterns you've witnessed. The more you watch, the more familiar the behavior becomes. Markets evolve, but human emotion does not. Every breakout is human nature expressed through price. Some traders will say you can't spot them consistently, that markets are random, unpredictable. But those traders either haven't observed long enough or haven't built the discipline to wait. Breakouts aren't random, they're conditional. If you develop your ability to perceive pressure, you'll see them clearly. It's like being a hunter. You don't chase blindly through the forest. You read signs, track movement, remain still when needed, and strike when the moment presents itself. Trading is the same. Are you the hunter of probability or the prey of emotion? The real edge isn't in predicting, it's in preparing. You don't forecast a breakout. You build a state of readiness. You define your parameters, identify areas of interest, and wait for energy to align. Then, when the shift happens, you act decisively, not from impulse, but from preparation. The one who guesses is gambling. The one who prepares is grounded. Which one are you? A breakout is nothing more than the visible release of invisible pressure. That principle alone contains the essence of trading psychology. The market is human emotion, quantified, fear, greed, belief, uncertainty, translated into price. The structure that binds it all is pressure, buying pressure, selling pressure, the collective tension of opposing forces. That tension builds layer upon layer until one side exhausts. Then it releases, what we call a breakout. Most traders believe these moves are spontaneous, like miracles of luck. That's why they miss them. They're watching the explosion, but ignoring the buildup. The buildup is always there. Quiet, gradual, unnoticed by the distracted but obvious to the disciplined observer. When you see a market tightening, do you dismiss it as boring, or do you recognize it as potential energy waiting for direction? Think of a dam holding back a river. To the untrained eye, the dam looks solid, but to the attuned observer, small cracks and vibrations reveal growing pressure. You can ignore it and be caught in the flood, or you can recognize the signs early and position yourself before the surge. That's what trading is, recognizing stored energy preparing to express itself. When price consolidates, it's not dead. It's alive with potential. Buyers and sellers reach temporary balance, but that balance conceals tension. Strong hands accumulate calmly, while weak hands exit in frustration. Each sale transfers control to stronger participants. And when the balance tips, when supply fades and demand dominates, the pressure releases. The breakout isn't magic, it's inevitable. Do you see now why patience matters more than prediction? You can't force energy to release. You can't will the market to move. The only control you have is over your perception. You must learn to recognize the signs: tightening ranges, persistent pressure against a level, subtle increases in volume. These are whispers of structure, not shouts. Most traders ignore whispers, and when the roar comes, they're shocked. The key mistake is confusing noise with true pressure. Spikes and volatility are emotional distractions. True pressure is quiet until it isn't. Notice how, before a storm, the air goes still, heavy, expectant. That's the same energy before a genuine move. Breakouts don't obey your timing. They unfold when the collective energy is ready. That's why patience feels so uncomfortable. Most can't stand stillness. They crave action. But fortune favors the observer who waits for structure to complete. Patience is your test. It exposes your relationship with uncertainty. Can you hold your seat through calm markets, or must you act just to feel involved? Every time you give in to impatience, you donate to those who don't. The strong hands rely on that. They let the impulsive sell cheap so they can accumulate quietly. When the energy finally releases, they're the ones positioned. Breakouts don't reward the first or the last. They reward the balanced. The trader who acts precisely when probability peaks. Too early, and you're whipsawed. Too late, and you're chasing. But if you've trained your perception, you'll feel when the structure is ready. Each shallow pullback, each absorbed dip, each higher test of resistance reveals growing imbalance. The price begins to behave differently. Less weakness, more strength. That's the language of pressure, becoming release. Most traders crave certainty, a formula, a signal, something guaranteed. But certainty doesn't exist here. What exists is probability, an alignment of conditions that increases the odds. The tighter the compression, the deeper the preparation, the stronger the conviction of those holding, the greater the potential energy when it breaks. Nothing is certain, but probabilities lean heavily when structure aligns. Are you seeking guarantees, or are you training to read probability like a professional? And remember, the breakout isn't the move itself, it's the threshold. The real profit unfolds in the expansion that follows, when stored energy becomes momentum. That's when the crowd notices, when the media explains, when emotions erupt. By then you're already positioned, calm, detached, aligned. But pressure is neutral. It doesn't care about direction. Breakouts occur upward or downward with the same psychology. Distribution builds breakdowns just as accumulation builds rallies. The key is recognizing where imbalance resides. Most traders see only the explosion, calling it unpredictable. The trained mind sees inevitability. What looks sudden is just the final stage of a process long in motion. The longer the energy builds, the greater the release. A market compressed for months can erupt like a coiled spring, driven by all that stored belief and emotion. The best moves come not from noisy markets, but from quiet ones. Can you sit still with silence, or do you need constant excitement? The art of trading is observing stillness as signal, not absence. Every narrow range, every tightening coil, every subtle buildup is communication. Are you listening or chasing the noise elsewhere? When the release arrives, don't rationalize it. Don't seek validation. Don't ask why. The explanation always comes after the move. The market tells you everything in the moment. The only question is, do you trust your awareness or the crowd's confirmation? A valid breakout holds its ground. That's the difference between genuine flow and manipulation, between conviction and noise. The market is filled with traps, false starts, shallow bursts, emotional bait. The professionals understand this. They design it. Every day, the crowd reacts to small surges, thinking they found gold, and ends up trapped in retracements. They blame luck, but it was never luck. It was emotional conditioning. They didn't understand the true test of a breakout. It's not just about crossing a line, it's about sustaining beyond it. Think of resistance as a psychological boundary, not just a price level. Every attempt upward meets emotional resistance. Traders selling too soon, fearful of losing or taking small profits to feel safe. But when the collective belief shifts, when conviction replaces hesitation, price doesn't just breach the level, it holds. It establishes acceptance at new value. That acceptance, that ability to remain stable after the push, is the mark of a true breakout in both structure and psychology. Have you noticed how the strongest markets feel calm after moving higher, as if they naturally belong there? Weak ones rush up and collapse. Strong ones breathe at altitude. When a breakout fails, it usually fails immediately. The move may look powerful at first, but it lacks conviction. A small wave of selling sends it collapsing back, because belief was fragile, participation emotional. That's not strength. It's noise. It's the illusion of control seducing those who need to be right. But when a breakout holds, it behaves differently. Selling pressure meets quiet absorption. Fear encounters composure. Buyers don't panic. They stabilize. That behavior signals that belief has shifted, that value has migrated higher. Do you see now why confirmation matters more than prediction? Confirmation isn't waiting endlessly. It's reading behavior after structure changes. Sometimes it takes minutes, sometimes hours. The key is the quality of response. A market aligned with conviction acts congruently. It doesn't retreat in fear, it consolidates confidently. That's stability you can trust. The crowd may hesitate, still haunted by past failures, but the tape reveals the truth in action, not words. A breakout that holds transforms psychology. Resistance isn't just a chart pattern, it's a memory of pain. Every reversal from that point reinforces belief that this is where it fails. When price finally breaks through and sustains, it doesn't just destroy a level, it destroys a belief. Those who were certain it would fall are suddenly uncertain. Uncertainty becomes discomfort. Discomfort becomes forced buying. That's how momentum feeds itself through the transformation of disbelief into participation. Can you see how stability above resistance traps not prices but people? Professionals understand this deeply. They don't react to the first breakout. They observe to see if conviction appears. When it does, they act decisively, knowing the crowd will soon follow. Professionals don't need to be first. They need to be aligned. Being early without confirmation is still being wrong. Do you value being right in your timing or profitable in your execution? The best breakouts don't feel manic. They feel composed. They rise, pause, and settle naturally. Weak ones jitter and shake, unable to hold composure. That nervousness is the tell of emotion overpowering structure. Strength expresses calm. Calm is confidence. It takes experience, years of observation, to sense this difference intuitively. But once you do, you'll never confuse movement with momentum again. Volume also speaks the language of conviction. True breakouts are supported by participation, real commitment. You'll see elevated activity as price crosses resistance, then balanced volume as it holds. It's not the initial burst that matters most. It's the follow-through. Without genuine participation, the move collapses under its own fragility. But when commitment sustains, the breakout has structure, muscle built from belief. Now here's where psychology plays its cruel trick. Most traders think the move ends when it pauses. They see price stabilizing and interpret it as weakness. It's stalling, they say, an exit. But that pause is digestion, acceptance, price consolidating at a new emotional equilibrium. What looks like stillness is strength accumulating. How many times have you sold too early, only to watch the market move on without you? That's impatience, not error. False breakouts teach pain, but true breakouts teach patience. If you react to every small move, you bleed from 1,000 tiny emotional cuts. The professionals know this. They exploit the public's restlessness. pushing price just high enough to trigger hope, then selling into emotion. The crowd loses money and confidence while professionals accumulate conviction. When the real move begins, the crowd hesitates, scarred by false starts, while the professionals already sit in alignment. That's how the market humbles the reactive mind. To protect yourself, you must demand proof, not in analysis or commentary, but in behavior. The only valid question is, can price sustain beyond its boundary? You don't need to guess or predict. You only need to observe and act when confirmation is evident. That's the difference between hope and professionalism. A breakout isn't defined by the cross, it's defined by the hold. The hold reveals conviction. The move beyond resistance is only half the story. The real insight lies in how price behaves afterward. Does it act as if it belongs there? If so, that's strength. If not, step aside, no loss, just preservation. The discipline to wait for proof is what separates consistency from chaos. Remember, the market will always test conviction. Even the strongest trends will retrace. Small dips meant to question your belief. Those dips ask, are you grounded in your edge or reacting to emotion? If the breakout is genuine, pullbacks are shallow and supported quickly. If it collapses, it exposes fragility. Can you face these tests without reacting impulsively? All enduring campaigns are built on authentic structure, on real breakouts that hold and defend. They don't flicker, they establish and expand. That defense becomes the foundation for trend, for continuation, for compounding. Without it, every move is just noise, traps for the undisciplined. Patience is profit, impatience is lost. No principle in trading is truer, yet it's the hardest to embody. Traders spend endless hours studying charts, chasing signals, taking constant action, anything but waiting. Stillness feels unbearable to those addicted to motion. They believe participation equals progress, but in truth, activity without structure is self-destruction. The market rewards patience, not prediction. Every major success comes from waiting for structure, for confirmation, for timing. Small wins come from being right. Great fortunes come from waiting for rightness to unfold fully. Most never learn this distinction. They take small profits, avoid discomfort, and end up with exhaustion instead of equity. Ask yourself, do you trade from opportunity or from fear of missing out? Impatience is the crowd's disease. Watch them, fidgeting, whispering, chasing excitement. They need movement to feel alive. They confuse emotional stimulation for success. But the market isn't entertainment, it's reflection. It mirrors your discipline. Activity is not profit. The market doesn't care about your busyness. It only rewards your alignment. Patience isn't laziness, it's mastery. It's sitting through stillness with awareness. It's resisting the impulse to jump, the fear of missing, the temptation to overtrade. It's holding conviction when noise surrounds you. Any novice can click a button. A professional can wait. Can you sit calmly while the crowd trembles? Can you act only when the structure demands? The market punishes haste, always has, always will. The trader who jumps early pays for certainty that never existed.